sector remains under pressure. Absa's Purchasing Managers Index declined by 1.6 points to 43.1 in May. This marks the 7th straight month that the headline PMI has been below 50. Absa says this suggests that the sector continued to suffer despite some flickers of activity and demand improvement, albeit at extremely low levels. One bright spot was the index tracking expected business conditions in 6 months' time. That rose to its highest level since the end of 2024 as global tariffs were suspended and businesses expressed optimism that local political disagreements over policy would be resolved. Anglo American has completed its demerger of Valterra Platinum, and shares in the newly independent miner have begun trading on the Johannesburg and London stock exchanges. Valterra CEO Craig Miller pointed out in a statement from the company that the London listing is a pivotal step in the group's evolution as a standalone PGM business. That's as it not only broadens the firm's shareholder base, but it also underscores the company's commitment to long-term value creation for the benefit of all its stakeholders. Anglo Gold Ashanti has lightened its portfolio. The bullion producers agreed to sell its interest in a gold mine in Brazil named Mineracao Serra Grande, and that's in a deal worth $76 million. The sale excludes certain subsidiaries of MSG which hold assets that do not form part of mining operations. Anglo Gold CEO Alberto Calderon says the sale ensures that the miner will sharpen its focus on capital allocation, operating efficiencies, and the optimization of its portfolio. Sirus has upped its annual dividend. The property firm has declared a second half payout of 3 cents per share. This takes the total for the year to just over 6 cents, and that reflects an increase of 1.7% on the prior period's dividend. CEO Andrew Coombs says this is the 23rd consecutive increase in the company's dividend over a 12-year period. Robex has posted higher year-end profit. The Infrastructure Development and Construction Material Supply Group has posted a near 26% jump in headline earnings per share, and it's declared a dividend of 104 cents, which is 13% higher than the prior period. Robex says its diversification strategy played a pivotal role in driving the performance. It's also pointed to a strong balance sheet, a healthy cash balance, and a solid order book, which increased by over 10% to 28 billion rand. Solid, that's how Momentum has described its operational performance during the 9 months to end March. During the period, normalized headline earnings amounted to 4.8 billion rand. The insurance company says the results were underpinned by disciplined execution across the group's business units and a continued focus on profitable growth. Looking ahead, Momentum has stated that it will focus on driving sales volumes and has confirmed that its financial ambitions for the 2027 financial year are achievable. Telecoms full-year headline earnings are expected to almost double. That's after it turned in a robust operational performance and the sale of SwiftNet was completed. Adjusted headline earnings per share for continuing operations are forecast to be at least 95% higher. Telecom is due to release its financial results on the 10th of June. Business Leadership SA CEO Busi Mavuso has slammed the financial state of the country's metropolitan municipalities as shocking and says it's a serious constraint on much-needed economic growth. This follows the Auditor General's local government audit outcomes for 2023-24. It shows that 99 municipalities received unqualified audit opinions with findings, while 90 received qualified opinions with findings. Mavuso says this shows that most municipalities can't get basic financial management right, and intervention is sorely needed. In international news, global airlines shaved a key forecast for 2025 industry-wide profits, blaming trade tensions and declining consumer confidence while hitting out at unacceptable delays in jetliner deliveries that have hindered their growth plans. Let's take a look for more detail.
The world's airlines have cut their profit hopes for the year amid trade turmoil. Industry body IATA now expects a collective profit of $36 billion for 2025. That's $600 million down on the December forecast made before Donald Trump returned to office. Since then, he's launched a global trade war and tightened border controls. That has fueled economic uncertainty, causing many travellers to cancel or postpone trips. Speaking at IATA's annual meeting in New Delhi over the weekend, boss Willie Walsh said the headline for profitability masked serious vulnerabilities.
Although our revenue forecast is down, our cost forecast is also down. And that leaves us with a net position which is broadly similar to what we had previously forecast at $36 billion US. Lovely figure, very big by any measure, but when you translate that into margin, it's a margin at 3.7%, and that remains a wafer-thin margin for the airline industry.
Delays in the delivery of new jets are another problem for the industry. Major jet makers Boeing and Airbus have both been dogged by a variety of supply chain issues, with the European firm warning last month that delivery delays would last for another 3 years. Such problems have forced carriers to keep operating older, less efficient planes. They've also faced rising prices for the dwindling stock of available spare parts. However, that has been offset by a drop in oil prices. IATA predicted a 4.7% drop in cargo revenues for the year, with tariffs dampening trade and cutting global growth.
And China said that U.S. President Donald Trump's accusations that Beijing had violated the consensus reached in Geneva trade talks were groundless and promised to take forceful measures to safeguard its interests. Here's more detail in this report.
China rejected accusations from the US it had broken the consensus of recent trade talks. Beijing said Monday President Donald Trump's accusations were groundless. It also promised to take forceful measures to safeguard its interests and accused Washington of seriously violating their trade truce. The comments came in response to Trump's Friday statement that China had breached a deal to roll back tariffs. US Commerce Secretary Howard Lutnick spoke on Fox News Sunday with Shannon Bream.
I think what happened is Secretary Bessent and Ambassador Greer went to Geneva. They made a deal with the Chinese. And really the right way to say it is they're just slow rolling the deal. So I think slow rolling is the right way to say it. And I think Donald Trump is on it.
But China said Monday it had implemented and actively upheld the agreement reached last month in Geneva. It further accused the US of introducing many discriminatory and restrictive measures against China. That included issuing guidance on AI chip export controls, halting sales of chip design software to China, and revoking visas for Chinese students. It did not elaborate on what forceful measures it might take in response. Beijing and Washington agreed in May to pause triple-digit tariffs for 90 days.